Good morning, I'm Laura Larghi from Merger Market, a journalist responsible for the clean tech sector. I'm here at the Renewable Conference of Merger Market with Greg Story, partner at Solar Energy Partners, and we just had an interesting panel about the renewable energy sector and its sub-segment, and now Greg will tell us a little bit about the future and summarize the main topic we talk about. Greg.
The most important issue that was discussed is the decline in costs of equipment. In the solar sector, there's been a dramatic decline in the cost of panels. Last year alone it was 40%, but over the last 2 or 3 years it's come down by 70% or 75%. That has been driven by an enormous increase in solar panel manufacturers in China, and all the way up the value chain within solar, including cells and wafers and polysilicon. There has been lots of new entrants and an enormous amount of oversupply all the way through the value chain, and costs have come down at all levels, and that's resulted in the dramatic decline in the prices of solar panels. That has resulted in many companies, particularly in Europe and the US, who are now losing money, and some of them have gone into bankruptcy, and others are working with their shareholders and their banks to restructure their finances. And what will happen now in the next phase is there will be a lot more M&A activity because there'll be many companies that cannot continue in their current financial position. They will either disappear or they will merge. The demand for solar panels is globally still quite strong, because although there is less demand in Europe, there is now more demand in China and Latin America and South Africa and the US. So overall demand has declined a bit, but not dramatically. Then in the wind side, it's a similar story. There are lots of new manufacturers of turbines, particularly in China, and they are forcing down prices. That's good for the industry overall, but it causes a lot of pain and stress for a number of years while companies go through restructurings and mergers and acquisitions. And there'll be some winners and there'll be some losers, and some will disappear and some will get stronger. In geothermal and biomass, they are still very technology driven, so they are not commodities like solar panels or wind turbines. There's still lots of different types of technologies, and that is much more of a niche market, and so we're not seeing the same financial distress and the same M&A activity. There's still lots of new technology in biomass and geothermal.
And what do you see between financial investor and strategic investor? Who do you think is going to lead the consolidation?
I think it's going to be led by strategic investors, but they are going to require capital. And recently Berkshire Hathaway have been involved in M&A in renewables in the US. Allianz and Munich Re have been investing as pension funds in Europe. There are lots of private equity firms that are looking at renewables and have entered renewables. KKR, Capital Dynamics, Partners Group, Denham Capital, Terra Firma, and then there are corporates like Google and Virgin who have invested in various stages in renewable energy. So there is lots of interest in the sector. There is also lots of caution, but there is lots of interest. And I think that compared to other industry sectors, the amount of capital, both equity and debt, that is available is quite reasonable. And so it'll be a combination of strategic players leveraging off the increased capital base that they can obtain from pension funds and private equity, and together they will be driving the consolidation plays.